Hey everybody, so I just wanted to make a very quick technical recap video, and this one is just a little bit more focused on the Qs and why I'm just a little bit more bearish as of now. So, obviously today we had a pretty good day on the Qs, but we didn't necessarily have a good day on SPY, IWM, or Dow. So, it's just a little bit unique right now that we are seeing that the Qs are melting up higher, whereas the rest of the market is not doing as well. So, here's just the technicals right now. So the very near-term resistance that I'm paying very close attention to is this 331.49. That is the 50% retracement level, as you guys can see here. Now, if we're looking at RSI, it's not terribly overbought. It's just ever so slightly. It's at 63. And if we're looking at MACD, MACD is ever so slightly above the signal line. So I could just go ahead and zoom in there. But we are starting to see that MACD is kind of flattening out right there. So, we're ever so slightly above the signal line. So as of now, you could still say that this is slightly bullish right here. But, I do think that we're very close to topping out because like I said, I'm paying attention to that 50% retracement level, which I do think can act as potential hard resistance. We've seen it in the past right around here and right around there. So are we going to see the same thing, or are we actually going to just tumble before that? Or maybe I'm completely wrong and we get above it. So another thing that I do want to point out is that we were in this rising wedge structure. We're slightly above it. Now the last few times that we got above this rising wedge structure, we quickly made it back down below. So you can see that was the case right here. That was the case right there and right there and right there. So here we are again. Now if we go back to a shorter time frame, we can see that there's several gaps. There's one gap, two gap, three gaps. So we got three gaps to the downside, and we're almost approaching that 50% retracement level, which is just a little bit over 1% from where we are right now. So I definitely do think that the risk reward doesn't look all too great here. So, I do think that there is more potential reward to the downside. But obviously, people are getting trained to buy the dip right now because every single time we do fall, it seems like we just rally right back up. But, you do want to pay attention to what is actually within the Qs. And the major holdings in the Qs are Apple and Microsoft. And I do think that the momentum, we're starting to lose just a little bit of momentum there. And I'll show you what I mean. So let's go ahead. Let's find our Apple chart here. So, well, here's Microsoft. So let's do Microsoft first. So one thing that I'm looking at on Microsoft is that we broke out of this rising wedge scenario, but we haven't necessarily back tested that trend line. So as you guys can see here, we broke out, but we haven't necessarily back tested this trend line. And I've been looking for a back test on this for a while now. So, it's been, let's see, how long has it been? It's been just a few weeks and since we broke out of this. So I do think that in the near future, we could come back and retest this. So that would be looking at the low 300s. Now, if I'm looking at MACD right here is very, very interesting. So notice that, the blue line right here, it's pretty much topping out. And this is the same area that it's topped out several times before. So it topped out right there, right there, right there. And where are we right now? Well, we're right around the same level. And we're now starting to see that this signal line is starting to be breached. So we could have a bearish MACD crossover here. Now, if we're looking at RSI is pretty darn high as well. It's about a 66 reading. So in my opinion, there is just a little bit of risk here on Microsoft as of now. I'm definitely thinking in the shorter term, we could approach this trend line. So, maybe I could be entirely wrong. And maybe we just continue a little bit higher, and do note that this trend line is upsloping. So maybe we could retest this, but at a later time where we're essentially at the same price action. So that's one thing that you do want to be wary of. But the main thing that I wanted to point out here was the MACD, which, as I said, it topped out right here, right there, and right there. So is it going to top out right here again? And then we're going to get that bearish crossover, leading to a pretty significant pullback from where we are right now. So that's Microsoft. Now let's go ahead, let's look at Apple. So if we're looking at Apple, we're seeing something similar as well, where the MACD is starting to cross underneath the signal line. So we are starting to see some bearish impressions on the MACD. Now, if I am looking at just the chart right here, just look at the candle right here. I mean, it's pretty much building a doji right there, but we're still above the support trend line. So there's several supports here, but we could easily just crack right underneath both of these right there. So that's something to watch out for, because if we do crack underneath both of these, I think we could see a sizable dump, at least to this next trend line right there. And for Apple, that could be like a $10 move right there. So definitely something to watch out for. Now, another thing that I want to pay attention to is the VXN, which is the volatility for the Nasdaq. So let's go ahead, let's look at VXN. So if I'm looking at VXN right here, let's go over to the 10-year 1-day. And let's just go back a little bit. So you guys can see that we're in this wedge structure right here. But as of now, we are underneath the support trend line. So go ahead and ignore these long standing wicks. So ultimately, we are below this trend line right there. And let's go on to a shorter time frame. So on the shorter time frame, we do have this massive gap to the upside. Now, in the past, if you do go back and you look at VXN, when we do have these upside gaps, they generally tend to last about 1 to 2 weeks. So usually they get filled within a week, but every now and then you do see them take a little bit longer, and usually that's within 2 weeks. So this right here, this happened right around May 4th. So, if we were to go 2 weeks, then we're very close to that date. So, that would essentially be the 18th. But I would just watch out for us to fill this gap in the short term. So I said usually around 2 weeks is about as long as these gaps go. But, obviously it could be a little bit longer, but do watch out for this gap right here, because that's a pretty sizable gap to just leave alone for this amount of time. Now, another thing that I do want to pay attention to is let's go on the 10-year 1-day, and let's go ahead and let's look at the MACD. So if we're looking at the MACD right here, we are starting to see that it looks like it might cross over. So it's very close to the signal line. So we could have a bullish crossover on the MACD. Now, another thing that I do want to pay attention to is the weekly. So if we're looking at the weekly MACD, do note that it is kind of starting to flatten out here. So I would definitely watch the MACD closely on the VXN. So if the VXN does pop, this weekly MACD might actually pop as well. And then, we could be closer to flattening out and then getting back above the signal line. And then we could see a period of volatility enter the markets. So definitely something you want to watch out for. Now, last thing that I want to look at is the dollar. So let's go ahead, let's look at the dollar. Now, the dollar is very interesting. So if you're looking at the dollar on the weekly chart, and you're looking at the MACD, so look at the MACD right here. So we tend to have these double bottom type patterns on the MACD showing up. So that first fall down, that's usually a fake out. And then, or this first crossover, that's usually a fake out. And then you see this double bottom type structure on the MACD. So we see it right here as well. We see it right there. And then we're kind of seeing it right now as well. So if we're going over and we're looking at the MACD, we're having a bullish crossover right there. So on this double bottom type structure right there. So something to definitely pay attention to. Now, if we're looking at the 10-year 1-day chart, MACD did have that bullish crossover already. And if we are just looking at the chart right now, let's go over to a shorter time frame. So if we're looking at the chart, we broke out of this down trend line that we were in. And you can see that we also left 2 downside gaps, but we also have 3 upside gaps. So the question is, okay, well, are we going to fill this downside gap? If we do fill that downside gap, we're still out of this breakout trend line. And then, maybe we could go and we fill this, and then we could go and fill these upside gaps. But if we go ahead and fill this downside gap, well, then we re-enter this trend line. So, obviously right now things are looking a little bit crazy on the dollar, and we have upside gaps, we got downside gaps, but ultimately, it did break out. And right about now, I do think that the dollar does look a little bit more bullish. Now, another thing to pay attention to is if we are looking at these moving averages right here, this moving average, that 50-day moving average, it's finally starting to kind of meet the price action right there. So we are now above the 50-day moving average on the DXY. So the 50-day is right around 102.56. So we're now just starting to get above that. So definitely a lot of things to pay attention to, and I hope you guys enjoyed this video.